This is the June market update for Southeast Michigan, and the activity level in May and going into the first couple weeks of June is what we had expected, and for the most part the market is following what we had expected all year. Pleasantly surprised as far as what we expected, because we didn't think the market, at least this spring, would be quite as wild this year as it was last, and it turns out it is pretty much the same. Not quite as wild, but very close. The market, if you look at activity level, new listings coming onto the market are up, which is a good thing for buyers looking for properties. But buyer demand is also just as strong. So the net effect is that inventories are, particularly in the under 250,000 or in basically the lower priced market areas, inventories are still shrinking there. And as we've said in prior months, in fact, the number of homes sold is actually down in the lower priced markets because there just aren't enough properties to buy. The inventories are shrinking still there. In the upper end, the over 250,000, over 200,000 markets, inventories are rising. And particularly in the upper end, the over $500,000 market, inventories are rising even faster. So sellers in that upper price range are going to feel like the market is slowing down quite a bit. It really isn't in terms of buyers. In fact, there are more homes in Wayne, Oakland, Macomb, Livingston County. There are more upper end homes, either $500,000 and above or even $1 million and above, sold this year than last year. But there are also more listings. So as we said in prior months, as a seller you feel like the market is slower because you have more listings per buyer available. What that means is that prices aren't rising as fast. In fact, in May and April as well, the average sale price per square foot and even median price in the upper end is flat to even slightly down. That isn't a trend indicating that values are declining in the upper end. It just means that there's a bulge in supply, even though there's still strong demand. So the market is settling a little bit, balancing that way. In the middle market, activity is still very strong. Basically anything under about $500,000 is still strong, and certainly under $200,000 is very strong. So we're still seeing, coming into summer, we're seeing some very strong trends. Still about a third of the properties we're seeing are selling at or above list price. And that's across all price categories. A little less in the upper end, more in the mid-20s if the $500,000 and above, but still a quarter to a third selling at or above list. And homes selling 10 days or less, they've been on the market 10 days or less, is about 30% as well. Again, at the upper end, it's more in the low 20s. And homes selling after 30 days, so homes have been on the market 30 days or less, that's about half of the market. So it tells you the strength of the market. It also tells you that there are a number of sellers out there whose homes are not selling as fast, and for them they're not feeling the activity that we're feeling in other parts of the market. And typically that's because the home's pricing or condition doesn't match where the activity is in the market. So although the activity is as strong as we've seen in a number of years, unfortunately not every house in every market will feel that activity, but in general it's very strong, and coming into the summer every bit as strong as last year. The last piece we want to talk about is something we touched on last month as well, and that's the changes coming in to the marketplace for mortgages for the Respatila, or TRID as it's known, TRID is the acronym, for the new rules and mortgage applications and mortgage approvals. And that will, we anticipate that will slow down the mortgage process. There are a number of requirements that lenders have to go through that are a benefit to borrowers. They give the borrower more time to review documents and to make decisions, but because they have more time to do that, it's going to extend most likely the approval process when you're getting a loan. That means the buyers and sellers have to be more flexible in the transaction, more flexible from the time the offer is accepted by all parties to the time that you actually close and take keys to your new property. And in some of those areas, for example, appraisals will tend to be ordered later in the process than they have been in the past, which will add some days to the approval process. And also, lenders will probably be a little more cautious in the approval process they've been in the past, and that caution, double checking, will probably add some days as well. So whereas many instances we've been using about 30 days to get a loan approval from time of application to an approval, it's probably going to stretch to more like 40 days or more. You also want to figure there's going to be about 10 days between the time you sign the purchase agreement and all buyers and sellers agree to it till you have at least 10 days to make application to the lender, because there's some extra steps involved there from the borrower making application with the lender and getting information back from the lender. And finally, in the transaction itself, once you've received your loan approval from the lender, now you have to go to closing. You have to create the final paperwork and all of those things, and that's going to take, where typically that was taking maybe as close as 3 days to 5 days to do. You want to figure at least 10 days. At least that's what lenders are telling us that we should be figuring and writing in the purchase agreements at least 10 days to allow time for buyers to get the information. Buyers have 3 days to need to receive the closing documents 3 days before closing, so they can take a look at the information. And any changes that occur in the documents once the buyer has received them could trigger an additional 3-day review period, or at least a couple days to go through, quickly go through underwriting and confirm the changes. So all in all, we're using a rule of that's been suggested in the industry is called 10-40-10. 10 days to get the approval or to get the application into the lender and back, 40 days for the approval process itself, and then once the approval has been given, 10 days to close. And if you follow generally that term, then that process, then you should be okay. The main thing to keep in mind as a seller and a buyer is just to allow for patience in the process, to understand that there could be some surprises that neither party had control over. And then actually in our purchase agreements beginning August 1st, we'll offer an addendum to the purchase agreements that buyers and sellers can use that basically allow for some additional time in the transaction process to allow for these regulatory changes that, again, neither party has any control over. So overall, this change, the TRID change, is good for consumers. It's better disclosure, it's better information, easier to understand, so it's a good thing. But putting it into the process, particularly in August, is one of the peak activity months of the year, and trying to manage that change will probably cause a little bit of frustration, but we're working very hard to minimize that. Overall, again, as a recap back to the market side of things, market's very strong. Inventories are rising a little bit, so buyers may have more choices, but still need to have some patience and be willing to move very quickly, because it isn't rising quite as fast as the appetite for buyers to buy. So overall, good. Thanks.